Hi everyone, let's go over my micro and local bullish and bearish Elliott Wave scenarios on Bitcoin. Starting with the micro bullish scenario, where this is a finished corrective structure in a WXY that landed perfectly in the most common target area for a wave Y and taking the liquidity of the key level that we've been looking for the whole previous week at 29.5k. Now from this level you then want to see impulsive structures towards the upside as we expect higher prices. And if we then zoom in to this structure over here, then we have a potential 1-2-1-2 scenario going on in this bullish scenario. So then this is a wave 1 to the upside, followed then by a 3-wave corrective wave 2, then another 1-2 for then eventually a bigger 3 towards the upside, meaning that this move to the upside that we have right now is the beginning of a bigger wave 3. That means that if price moves to the upside, you really want to see volume move to the upside as well. And as it stands now, we at least have a little bit of a bump in the volume towards the upside. The main thing is this potential wave 1. Can you count 5 waves in this wave 1? I mean, you can force it though, right? You have a 1, 2, 3, 4, 5 wave move. This wave 4, however, very short in time as well as very shallow. So there is a rule of alternation. If wave 2 is long and shallow, wave 4 tends to be deep and short. Now this is definitely short for a wave 4, not very deep, but at least it doesn't have overlap with the high of wave 1, which is one of the requirements of a impulsive structure. And of course, if this wave 4 was going to be deeper, it would have had overlap, which therefore invalidates a potential impulse. So this then as a 1, 2, 3, 4, 5 wave move to the upside is then completing that green wave 1 for then a 3-wave very long corrective structure in a wave 2 and an ABC over here, where the most common target area for wave C is between the 1 and the 1.236, taken from the high to the low to then the high over here, which has been very nicely respected indeed. You can also see this target area was in confluence with the 0.382, which has been taken from the low of the wick to the high of wave 1, which is a rare target for a wave 2, not a common target, but still a target nonetheless. Then you can see that I have an leading diagonal on the chart over here for the second wave 1 before you then have the second wave 2, and then you expect a bigger wave 3 to the upside, right? So the leading diagonal, let's zoom into this. So this is the low then of wave 2. 1, 2, 3, 4, and then eventually a wave 5. Now, if you look at the volume, what's important and what you want to see in a leading diagonal is if price is moving to the upside, you want to see volume going down. And that's exactly the case. If you look at the peaks, they're going to be lower and lower as the pattern is evolving. Then secondly, wave 2 over here reached the 0.5 Fibonacci, which is a rare target for a wave 2 in a leading diagonal. However, the other targets that you can see are common targets. So over here, if this is a wave 1, 2, and then this is 3, most common target for a wave 3 in a leading diagonal is between the 0.786 and the 886, pulled from the low to the high of 1 to the low of wave 2, meaning also that this wave 3 is shorter in length, in price, than wave 1, which is also what you want to see. Then the low of this wave 4 and then a 1, 2, 3, 4, 5 has been bouncing on top of the 0.5. Now you can argue that this wick is very long. However, it doesn't invalidate a wave 4 as it didn't take this low. Also, the candles on both the 5 and the 15 minute are closing around that 0.5, which is the reason I kept the 0.5 on my chart. The 0.5 is a common target for a wave 4 and then a leading diagonal. And then wave 1 is simply not allowed to be, or wave 1, this final wave 5 to the upside is not allowed to be longer than this wave 3, which is the case as it is the 0.886 extension taken from the low of 2 to the high of 3 to then the low of this wave 4 over here. As you can see, the 886 very nicely respected as well. Now then we have this move to the downside, and this is where it starts to get maybe a little bit like doubtful, right? Because over here we then have a wave 2. These fibs, the 382, taken from the low of this 2 to the high of wave 1. And as you can see, the 382 is not hit, both on the logarithmic and the linear chart. And the 382 is already a rare target for a wave 2, and the 0.236 is a very rare target. So that is going to give us a very interesting discussion. Because if we go to the low time frame, and I'll talk about this scenario in the end, but over here you can see price bouncing on the 0.236. You can see once again over here price bouncing for a wave 2 on the 0.236. Now remember, that is a very rare target for a wave 2, but over here wave 2 236, potentially another wave 2 on the 0.236, and then if you zoom in to more locally, we might have another wave 2 that ends around the 0.236. Even though the 0.236 is here, it didn't hit the 302, which is quite surprising, of course, if that happens 3 times in a row, to be honest. But then if this is a bullish market structure, you want to see an impulsive move to the upside where volume is following price, where the minimum target should be the blue 1.618, which is pulled from the low of the green 2 to the high of the blue 1 to then the low of the blue 2. So this is a minimum target, and what's interesting is these targets over here, as wave 3 can be quite extended, are all around the 2022 range highs as well. So if price is going to go pushing, especially if it's going to hit the 1.618 in green, we might be in a new bull run towards the upside, or at least bullish market structure, right? Like for higher prices to come. If we then look at the micro bearish scenario, then what we're looking at over here is still a move towards the downside in either a wave Y or a wave C, with currently the preferred scenario probably being a wave C, but I will share my thoughts about this. So a WXY is then a 3-3-3 wave structure. Most common targets for then, in this case, this wave X is between the 0.618 and the 1.236, as this has to be a 3-wave structure in a wave X, also in a wave B, by the way, but also in a wave X. And if this is the first structure to the upside, followed then by this corrective structure, you want to see this third structure finish somewhere in between this area. Now, of course, we have very interesting liquidity above, and if price is going to move above this yellow box over here between the 1 to the 1.236, then we have the potential for a wave B expanding flat and then an A, B, C. So a WXY still on the cards, where we have a support area just below price over here around 29k, which is still very interesting. But if price moves towards the upside, the only bearish scenario you can imagine is going to be a potential wave B, where the most common target for B is in between the 1.236 and the 1.38, pulled from the high to the low of A, right below the 2022 range highs for maybe then a wick and a move towards the downside in a wave C. Now, this scenario especially is in great confluence as well with that low time frame scenario that I've shown just now in a second, because of what has been going on over here. So currently price bouncing on the 0.236, this being a potential wave 1 and then a corrective wave 2. Now the 0.236, again, it's a rare target, but time-wise, it works, because the 0.618 to the 1 to 1 fib time pulled from the low to the high of 1 is a very nice target time-wise for a wave 2 to end the wave 2. The problem is it's bouncing on the 0.236, which is a very rare target. Of course, it can happen, like price has proven, and also in the past, it's just a more rare target. Or we get a bigger correction, as I've just mentioned with the local bearish scenario over here, where we still expect a move towards the downside, the micro bearish one, sorry. But then this wave 2 is gonna be very long in time, and the target questionable, because the 382 is still a rare target, even though it is in confluence with the target box over here on the linear chart, and going below the 382, for me, well, the next bullet or the next support area is all the way down here at around 26.4k. So both of the scenarios have something that goes with them and goes against them, basically, where either this is a very shallow retracement but a good timing for 2, or the timing is going to be very, very long, but the retracement is going to be at least a little bit better. If we then go to the local bearish scenario, then we zoom in over here. And in this particular scenario, we have to think about 3-wave structures. So the first 3-wave structure is finished, and we're now looking for another 3-wave move to the upside. Now, targets for a WXY is the 0.618 to the 1 and the 1.236. So this whole area is an interesting target area for a wave Y. And in a potential A, B, C, it is mainly this area over here. Now, the white line that you see is also a 2022 range high, which is in confluence with this area, and that's the first area of interest. So if price is going to take this high and move down, the bearish scenario for then a potential WXY is on the cards. However, if price is going to continue pushing, reaching the 1.618, now the 1.618 is a common target for a wave 3 in potentially a 1, 2, 3, 4, 5. Now remember, yes, we do have the micro bearish scenario target, which is also here. But if price is going to continue pushing to the upside in a straight line, then it's more probable that this is a wave 3 than a wave B, because even in a wave B, you want to see a 3-wave structure. And currently the target for a 3-wave structure is over here, not up here, not up here. So if price is going to continue pushing in a straight line instead of finding resistance in the target area, have a bit of a drop to the downside and then move up, if this happens, well, we could have a potential wave B. But if we go straight up, it is more probable it is going to be a wave 3 and that the 2022 range highs might become broken or might be broken. If we then finally look at the CVD over here, then locally what has been interesting, and I've been updating the sales about this, is of course we had big bullish divergences. However, just before this move to the upside, you started to see bearish CVD, lower high on price, higher high on yellow as well as on the blue CVD. That was happening at the moment in time. However, I didn't really like it. First of all, because this high is an in-between high. We didn't have any bearish divergences with the actual high of this bit of price action. So this is an in-between high, and I don't really like CVD diffs with in-between highs. And secondly, we have the bullish CVD divergences. So even though you see bearish CVDs over here, they go against the bullish ones. So they're countering each other, and I don't like that unclarity. Basically, it's not clear at all. I like clarity, so I prefer to wait for price to give us at least a direction. And now one of the CVD divergences played out, which is the bullish one. So now we can wait and see what's forming more locally. And if we do have a quick look at what's forming more locally, then we had some bearish divergences, lower high in price, higher high on the yellow CVD, but that one already played out with this candle to the downside. And then we had some bullish CVD, higher low in price, lower low on the yellow line over here, but that also just now played out. So therefore the playing field is completely neutral. If we then finally look at the probabilities, which is basically just like a summary, which I've been doing for the first time today based on your feedback, is first of all, probabilities on the low time frame. Let me keep this up. So on the low time frame, we are looking for this bullish structure, 1, 2, and then a bigger 3 to the upside. There's, however, this box which says this low is a good timing, but it is a very shallow retracement. The time is nice in between the 0.618 and the 1-to-1, but the retracement is very rare, very shallow. Can happen in very bullish markets, but nonetheless, it is shallow. Or you're going to get another move to the downside, but then the timing might be bad as it is going to be a very long wave too, but the retracement might be a bit deeper and therefore a bit better. But it's in between brackets, as you can see, because the 382 is still a rare target for a wave 2 and not a common target for a wave 2. Now, if you then look at the micro scenario, then between the two micro scenarios at the moment, it's very, very equal because it all depends, and that's what I wrote over here. It both depends on it moves to the move to the upside. So in the micro scenario here, what you want to see is an impulsive structure, and then a 1, 2, and then a bigger 3 to the upside, where if price is going to hit the 1.618 sitting at 32.4k, it becomes more probable that this is a bullish market structure for more upside. However, at the same time, the micro bearish scenario, where we are looking for a move to the downside, also still wants price to at least move a little bit to the upside. Yes, the 0.618 is a target for X, but as you can see, price already passed it, maybe backtesting now. So I would be looking at this area over here, which means expecting a little bit more upside for X or still more upside for B. But as mentioned, if price moves up in a straight line, then corrective structures less probable in general compared to the more bullish market structure. And the 1.618 is over here. So if price is going to go for a wave B, then in general, the more bullish scenario is going to be more probable as well. So we have to wait and see what price is then going to do more locally. And if we then look at the more local scenario over here, which is either the 1-2-1-2 scenario, right, to the upside, or the bearish scenario, where we want to see a move back towards the downside, which is basically the same as the micro. But then in the more local scenario over here, again, both are towards the upside, because in the bullish scenario we want to see the 1.618 in green being hit eventually at 32.4k, because that's a minimum target for the green wave 3. And in the local bearish scenario, preferably we're going to look for this area over here, especially after passing now the 0.618, potentially backtesting it. You'd be looking for this area. So in both scenarios we're looking for upside. The big question is, are we going to find resistance here and move down? Then the bearish scenario is still active. Are we going to push through to the 1.618? Then the bullish scenario gets a higher probability. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use. And for now, thanks for watching and subscribing, and I'll see you at the next one. Bye bye.